Hey guys, welcome to the first episode of the new series, Let's Discuss, where each week I am going to be talking about a particular stock or an investing concept or term. So actually I'm going to start off this first episode. I'm going to be talking about a particular stock, AT&T, as you might have guessed by the title. So the way it's going to kind of work is when I discuss a stock, I'll kind of highlight its dividend, if it pays one, its growth, so like its history over the last 10 or so years, if it's even been on the market that long. I'll discuss what I personally like about the stock, what I personally may not like about the stock, as well as I'll give every stock a rating. So it'll be be a recommendation to buy, maybe to hold, if you own it, maybe to sell. And that'll kind of be catered towards different investing strategies because everyone kind of invests differently. So like if you're a dividend investor, there's some things I might tell you to buy, whereas if you're a growth or day trader, might tell you to hold off or maybe to look elsewhere. So kind of do that, and then I'll kind of give you like my own personal like fair value for that stock. So like I'll tell you what I think it should be trading at or could be trading at in the near future. Which I'm no expert. I'm definitely still learning, but it's definitely different indicators that I see that could drive either price up or down depending on where it's currently at. So yeah, so this week I'm going to talk about AT&T, and then next week I will discuss a investing topic. Actually, I think I'm going to talk about dividend yield. So yeah, so after that next week, then I'll get back to another stock, and then we'll just go back and forth. So yeah, if you guys have any stocks or different terms or things you want me to talk about in these videos, I'll be happy to do so. I'll plan on uploading them every Thursday, and we'll just kind of go from there. So if you guys enjoy the content, please like and subscribe to the channel, and we'll get ready to get into it. So let's talk about AT&T. So AT&T is a major telecommunications giant in the industry, and really in the last couple of years have diversified their business interests, kind of expanded into more multimedia overall. Really, AT&T really needs no big explanation. I'm sure most of you are pretty familiar with their business model. So yeah, AT&T as of today currently trades at $26.76. They pay a pretty big yield of 7.85%, and that breaks out to $2.08 annually per share that they pay out in dividends. So in recent months and really years, AT&T has kind of been hit hard. They're currently trading roughly $6 or $7 lower than they had been over the last year or so. Which has really brought that yield up, which is still very strong. I mean, it's I don't recommend chasing high yield, but I think that they're a strong enough business model to where they can sustain that for the time being. So with their dividend, their payout ratio is a bit high. Over 65% of their earnings is paid out in dividends, which is a little bit high that you'd see from a telecommunications company. But they have proven that they can grow the dividend through tough financial times and economic times like we're seeing now. They've been growing it for 20 consecutive years, so they survived the Great Recession of 2008. So that's good to see. That's one positive thing. But the interesting thing about AT&T is even though the market has done very well over the last 10 years, AT&T is actually still down. They weren't down, but the last year or so has not been kind to them. They're down 31% over the last year, as well as I think 20% over the last 5 years and just over 7% in the last 10 years. So really these are prices for AT&T stock we haven't seen since the early 2010, 2011 really. So with that being said, there are things I like about AT&T, and there's also things I don't love. One of the things I like, the 5G revolution is well underway, and I think AT&T will do well with that. They're kind of laying the groundwork for a major 5G infrastructure, being a leading company in that. as well as their acquisition of Time Warner Cable and their properties has given way to HBO Max, which is a streaming platform that I think will do very well for years to come, I'm sure. But on the flip side of that, another one of their acquisitions in 2015 was DirecTV, which is a satellite TV provider. And satellite TV is, I think, slowly becoming a thing of the past as more people look to just go strictly to streaming or services such as Roku. I think DirecTV being on the books will bog them down for the time being. It's not a move I would have made, I guess, if I were them, but I think their acquisition of Time Warner Cable will ultimately supersede DirecTV and will ultimately be a boost for them for the considerable future. So with that being said, I actually will assign AT&T a buy rating if you are a dividend investor. I think with their very high yield as well as their really steady performance over the last 10 or so years, that I think that's really what investors such as myself are looking for, who really focus on dividends. But if you're a swing trader or a day trader or someone who's just looking for that growth potential, I'm not really sure that AT&T is what you're looking for. You might be better served looking elsewhere. And so with that, I would say, based off everything I've seen in their prior history, I think AT&T is actually trading about $4 to $5 lower than what their fair value should be. Like I said, they're hanging almost up to $27, but I think where they were even just a few months ago at $30 to $31 is really where they should be at. I think with COVID and the economic crisis, as well as uncertainty in their business model, because they do kind of have a lot of debt with those acquisitions I mentioned previously. There is some worry there. There's definitely some risk. I'm not going to say there's not. But I think AT&T is a solid play for the considerable future. I plan on holding AT&T for a long time, many, many years to come. That's why I have it in my long-term portfolio that you see in the M1 Journey, as well as my Roth IRA. I'm going to continue to buy AT&T. In fact, I bought some fairly recently, and they're actually trading below what I just bought them at, so I might look to buy some more in the future. But, yep, that's kind of my thoughts on AT&T. I mean, I just want it to be known. I'm not an expert. I'm not a financial expert. I hope you guys make your decisions on your own judgment and your own research. Please, please, please do your own research. Don't rely on just me to tell you what you should or shouldn't do with your money. So that being said, I think AT&T is a good company, and I think they'll do fairly well in the next couple of years. I think they're kind of rounding the corner on some of the previous years' kind of shortcomings. So okay, guys, I hope you enjoyed it. Please like and subscribe. If you have a particular company you want me to look at, please leave that down in the comments, as well as if there's any investing topics you'd want me to discuss. So I think next Thursday I'm going to discuss dividend yield, and then after that I'm going to kind of let you guys choose if there's anything really you want me to talk about. So I think that's going to take care of everything. Thanks, guys.